Shares of Salesforce are trading higher after the cloud-based software company issued new financial targets for the next few years, which the company said it now expects over $60 billion US in revenue in 2030. So for more on this, I'm joined by Gil Luria, head of technology research from DA Davidson. Good to have you join us. Thanks for taking the time.
Thanks for having me.
Okay, so Salesforce called for an organic year-over-year revenue growth rate above 10% in 2026 through to 2030. Given that the growth rate has been under 10% since mid-2024, how realistic do you actually think this is?
It's worth trying. I think, Salesforce, the stock is underperformed for a year as their growth has decelerated into the high single digits from what was almost double that rate a year or two ago. And I think what investors were encouraged by yesterday is that at least the company still has aspirations to get back to double-digit growth. Now, mind you, they said it would take 12 to 18 months to hit the inflection point. So we're still a little far away from that, but it's somewhat wishful thinking. But investors were encouraged by the fact that A, the company has these aspirations, B, part of it was a margin expansion, and C, they intend to buy back more stock, which at current multiples is not a bad idea.
Okay, so worth trying. Do those ideas that you just mentioned kind of counter why Salesforce has been underperforming in the last couple of years? Like, what are the reasons for the underperformance before we look ahead?
Their core businesses have been deteriorating, especially last year for a while. They were so intent on focusing on Agentforce and pushing that product to their customers that they neglected some of those core businesses, the Sales Cloud, the Marketing Cloud, the Service Cloud, and some of those acquisitions they made a few years ago. All of those businesses decelerated as the focus went away from them into Agentforce. And Agentforce is doing well, but it's from a very small base. It's still only a couple of % of the entire business. And it's not really ready for prime time. Agentic AI is a great technology that will eventually be very powerful, but we're not there yet. For the IT stack of the biggest businesses isn't ready to implement agentic AI. They still have a lot to do before those tools actually become beneficial. And so until that happens, Salesforce needs to go back and invest in its core businesses in order to accelerate growth there. And hopefully that's what they're doing now.
Okay, yeah, Agentforce is the AI software from Salesforce. So invest in core businesses. What else do you think Salesforce needs to really do to re-accelerate growth, or is that enough?
They need to go back to focusing on expanding margins. When activist investors got involved 3 years ago, Salesforce took a big leap in terms of expanding its operating margins. But then it started taking a break. And most recently, and this year, the margin expansion is going to be minimal. And there's still a big opportunity. Adobe, which is a comparable size, in fact, it's even a smaller company, has 10% higher operating margins and is still expanding them. So part of what was encouraging about the message yesterday was that now Salesforce may be looking to get back on the path of expanding margins. It's going to be, again, hard to accelerate revenue growth, but expanding margins is something they could do for their shareholders in order to increase earnings growth.
We're seeing the stock price for Salesforce, climbing today. I believe when we last checked at that chart, it was almost at 5%. Is this just hype because of this announcement today, do you think, or do you think investors really do believe that Salesforce can turn things around?
I think the message from yesterday was encouraging. Again, this notion that they at least are planning on accelerating growth. They are committing to higher margins. And I wouldn't neglect the fact that increasing the buyback is something that investors wanted to hear. So the ambition there is what's encouraging investors, again, after pretty significant underperformance for the last year.
Okay, you do have some alternative software companies that you say are showing growth as well. Do you want to go through some of those? We can start with, I believe the first one you mentioned was Snowflake.
Yeah, so the theme there is that while some software is impacted by a reluctant to spend until AI is more, the picture on AI is more clear, there are software companies that have accelerating growth. Those are infrastructure software companies that have accelerating growth because for them, AI isn't a threat. It's an opportunity because it creates more workloads, more data. And so companies like Snowflake that helps manage that data, set it up so AI can be useful, is already seeing accelerating growth. Datadog, it helps monitor and observe that data and the applications, seeing accelerated growth. JFrog, it helps create the code and then manage it, accelerating growth. That's where we're focused. That's the best part of software right now, and we expect that to continue because AI is becoming so much more powerful, and we are starting to use it more in applications. Those companies will benefit the most.
Okay, so we've been through Snowflake, Datadog, JFrog. There's one more that you suggested. That was Monday.com. Do you want to talk about that one? Because we do have some time left. And whether out of these four, you have a favorite of the four.
So Monday.com is a great work collaboration company, but more importantly, they operate the data schema for their small business customers, and that allows them to provide other packages of software around customer relationship management and operations to those customers. They have fantastic growth. It's still over 25%. They just had the misfortune of reporting earnings a couple of days after GPT-5 was released, and everybody was panicked about software. They missed by a hair, and the stock took a big hit, which means that we have a company with 25% revenue growth trading at 25 times cash flow. You don't get that opportunity very often, and that's what puts them on top of our list.
Very interesting. Okay, Gil Luria, head of technology research from DA Davidson. Thanks so much for joining us. Appreciate your time.